Okay, I hope everyone can hear me. I'm Andy Mancini, and along with me is Joe Cars. We're with Brand Elixir Partnership. We're a strategic beverage consultancy that focuses really on core craft beverages, sort of at the point of inflection when you all are starting to scale and need to really think through how to expand both the brand and the business. And I'll speak for Joe for just a minute. We're both really excited to be here and share with you all some of our insights and some of our experiences on market expansion. And what we hoped to accomplish today is to talk to you about a few things that you might want to think about as you're expanding your business, things that impact both your bottom line as well as your brand, and also your brand impact. Um, so we'll just dive in here. Here's our pretty faces. I'm Andy Mancini. You'll hear from Joe in just a little bit. We both come from extensive beverage backgrounds. Joe spent over 24 years at Jim Beam in the Chicago area with multiple general management experiences. And my background was really kind of a wandering path of beer and wine and spirits through the years. And Joe and I have both done sales and marketing and general management as well. So our goal today is really to help you think critically about market expansion. You probably get a lot of pressure from loyal consumers to say, hey, come to this state, or hey, when are you going to come to this market? And certainly you probably get a lot of calls from distributors like, hey, I can take your brand and boy, it'll be great and you'll have nothing but success. But there tend to be things that you really should think about when you're starting to consider expanding beyond your home market or your home region. That will have direct impact certainly on the success of the brand and the success of your business. While we can't cover everything today, there are 4 key areas that Joe and I wanted to center on for you to think about. One is positioning for success, and we'll get into that in a minute, but it's really, what does that brand and your brand stand for beyond your home market? The second is pricing for profit. And so many times we run into clients who think about profit sort of as at the end rather than at the beginning of the cycle. And certainly as you're thinking about expanding into new markets, into new regions, even in new countries, your price, certainly your profit is going to be critical for your ability to scale the business. Joe's going to talk about strategic expansion, things you really need to think about before you step foot into a new market. And then a theme that we use with our clients all the time is being fact-based and data-driven, and Joe's going to walk us through that as well. And we'll take comments, questions along the way. So, when we talk about market advantage, we're really talking about where your brand sits within your competitive set in your new market, and where your business sits as well in terms of your ability to take advantage of the opportunities that new markets and new regions bring you. We're big fans of brand positioning because it's the brands that really drive your business long term, and it's also kind of the core link between what consumers see and feel and what the trade deals with on a daily basis, which is the demand for your business, demand for your brand, and how your brand impacts in the marketplace. When we talk about positioning, it's not really an abstract concept, right? It's the sort of culmination of equity elements, the feel, the taste, the look, the story, all wrapped up in a package that consumers look at and say, hey, that's relevant to me. And over the years, we've seen in many, many categories the impact of what a brand does. And I'm just going to use a couple of examples, certainly ending in the beer and beverage alcohol category. But one of the key examples today, and it's in the news every day with is Tesla. And Tesla's a great story about one, jumping the shark in a category, right? So going from gas fueled cars to electric cars, and being able to sort of beat Detroit at its own game. And in every way you look at Tesla, the package, right? What the car looks like, what the name stands for, what the image of the product is. It attracts a certain consumer that is very loyal and is committed, to the success of that brand. And I think one thing in particular is that Tesla has really has forced the big three of Detroit not only to scratch their heads and say what took us so long, but really to play catch up in this really important world of electric vehicles. Another example of great positioning in the food category is Starbucks. Starbucks started 50 years ago. Seems so just like not too long ago, as a concept of enjoying drinking coffee. And then, long story made short, the key market leader at the time was Maxwell House Coffee. General Foods owned it, right? They basically ran General Foods out of business in the coffee industry. You can still see some canned coffees in the grocery store, but that whole experience of ordering what you want, having it hot, having it customized, having it convenient, having the experience of sitting and sipping coffee with other people, in the Starbucks stores, and having the baristas, building a relationship with them. That whole ethos around what coffee drinking is has been transformed because of Starbucks. And certainly in the beverage alcohol industry, we have a couple of great examples. One is Tito's. Tito's has transformed the vodka category and really put it on its head. You cannot go into a bar, you cannot go into a store without Tito's being the dominant vodka. Little known fact: vodka is 1/3, 30% of the total distilled spirits category. And Tito's, has taken over for a lot of reasons. One, we'll talk about specific positioning, but they've done two things. One, this gluten-free claim has really driven female drinkers to look at vodka, and again, I'm going to put this in quotes, as a diet drink. But the instance of celiac disease in the United States is about 2%. The reality that everybody thinks that they should be gluten-free, and Tito's has been able to take advantage of that. The second success that Tito's has had is that they took a really strong Texas approach about 20 years ago, and Tito Beverage went to Southwest Airlines and American Airlines, both headquartered in Texas, and said we should be working together. And so both airlines put the small bottles of Tito's into the planes. And as these Friday afternoon business travelers are having their drinks and landing home, they looked at that little 50 ml bottle and went the next day to their package store or their favorite liquor store and said, how do I get this Tito's? And literally that started the rapid expansion of Tito's. Closer to home, right, we have hard seltzers, versus flavored malt beverages, right? When you think about Truly and White Claw today versus Mike's Hard Lemonade or wine coolers in the past, California coolers, seltzers have really glommed on to better taste, lower calories, more flavors, and has transformed this canned cocktail or canned beverage category and put it on its ear. So we have a lot of examples of where positioning really is a concrete concept that should be taken very seriously. And getting really close to home here, let's just take a little history lesson in the beer category. You know, in the 70s, I'm not going to go through all this, but in the 70s, you know, big brands dominated, right? It was, you know, Bud, Miller, and even Coors were pushing, right, big mass marketed brands pushing out their flavors and their line extensions to consumers. And, you know, and in the 80s, it was all about imports. I can remember, you know, Lowenbrau and Heineken and Carling and Kirin, all of these taking over, if you will, and really giving domestic beers a run for their money, higher quality, the positioning of an import brand, you know, coming from an exotic country. And then in the 1990s, you know, craft came of age, as you well know, right? Sam Adams, Fat Tire, Sierra Nevada, Lagunitas, you know, being made regionally, being made locally. You know, the implication, right, was fresher, better. And then in the 2000s, those craft brands, you know, move over and are met with microbreweries. And this is where, you know, you start to see the breweries bringing consumers in, right? Ability to go travel, the ability to go visit a brewery and do the tastings, right? New Glarus, which is, you know, up in Wisconsin, and Three Floyds and Rhinegas. All these are great examples of taking that craft experience and positioning and moving it smaller, moving it more local, where today you see even, you know, the local craft continues to explode and continues to grow, where you have multiple breweries, you know, in one market, giving these regional players, you know, a run for their money. And so this whole cycle of branding and positioning, you know, is evident through our you know, our domestic beverage world. And it's important to think about where your brand sits in that whole spectrum of where you are today, but where you want to be tomorrow. If you happen to be in your own market leading because you're the highest ABV beer in the city or in your region, and you're going to a new market and you're going to say, hey, I can depend on that high ABV positioning, you may do a little bit of research to make sure there's not another established beer who's using that same positioning. So what does that mean? So here's some thoughts to think about as you consider, you know, your positioning and your positioning in new markets, right? What I've been talking about over the last few minutes is really positionings that are unique and powerful to the brand. What we like to talk about at Brand Elixir is authenticity and provenance, right? Or every brand has a story and every story is true. You know, these brands fill an unmet need, right? You know, Detroit may have said that everybody wants to drive big, you know, diesel and gas powered cars. And Tesla has said, nope, we think the world is moving to electric. And they may be right. They have over 100,000 employees now around the world. They fill an unmet need, right? I didn't know that I wanted to have a coffee experience, not just out of a can in the morning, but I can go someplace and get coffee just the way I like. I think I'll try Starbucks. Or closer to home, right? Microbreweries with higher alcohol, Tito's with gluten-free. All of these are unique characteristics that consumers say, hey, that's for me, right? And so why is that important? Why does it matter? So when consumers want you, right, they're going to seek you out. We've talked about Tito's, right? You can look at the explosion, right, of Elysian Brewery, Elysian Space Dust, which is, you know, is really growing rapidly. We can look at Rogue. I think they're out of Portland, right, which has been another great success. And so to net it all out, right, if you've got unique positioning, if you're continuing to own that niche and that category where you're positioned, you know, you can also count on distributors, right, to work harder for you. Distributors are going to look at those unique propositions, and they know that that's going to drive more volume and more margin for them. And so you become that in-demand brand, and they're going to work harder for you. I don't know if you can see this, but I wanted to just use a kind of a real world, real life example. Both Joe and I were at MGP, where we created the company's very first consumer portfolio of spirits. For those of you who are not aware, MGP is one of the largest distillers in the country and probably one of the largest in the world. They're the number one domestic gin distiller. They're the number one rye distiller in America and probably the world. And they're famous for their bourbon and their rye mash bills. But up until about 5 years ago, they were basically you could call it a private label distiller. You know, they distilled for everybody else. They didn't have brands. And the board of directors at the time said, you know, we're losing critical market and shareholder value to all these craft brands that we're helping get started, and they're exiting for hundreds of millions of dollars. You know, what are we going to do? And so we created a brands division, and we started building brands. I'm just going to use two quick examples of why positioning is important. Our first brand was George Remus Bourbon, which was named after the most powerful bootlegger during Prohibition, George Remus, who actually happened to be headquartered in Cincinnati, Ohio, which also happens to be 20 miles from MGP's whiskey distillery in Lawrenceburg, Indiana. And also, George Remus used to steal all of his whiskey, most of his whiskey, from that distillery during Prohibition. But you know, we were able to really use history and use authentic, you know, details from our past and from our distillery's past in building the George Remus bourbon brand really into multiple SKUs with great success. And we were able to do this also by leveraging not only our vast supplies of aged whiskey, but also to showcase our blending expertise, right? So we were able to compete with the existing, you know, leaders in the industry, the Jim Beams of the world, the Brown-Formans of the world, the Diageos of the world, by creating unique offerings with a true and unique story that drew consumers to our brand. The other example is Rossville Union Rye, where we are the largest rye distiller probably in the world, but definitely in the United States. But we didn't have a flagship rye. And so we created Rossville Union, which happens to be the original name of the distillery founded in 1847, which was called the Rossville Distillery. And we use those, you know, those historic facts and elements of our distillery to build a unique rye portfolio under the Rossville name. And both of these brands have grown in, you know, over 100-300% a year since introduction, because of certainly the great quality, but the uniqueness of the story. So it's true. So positioning works. That's the point. But, you know, expansion at what cost, right? So, you know, everyone's going to be pulling at you to, you know, come to this market and come to that market. And while we can't answer kind of everything for you, what we really stress is understanding the economics of your brand and your business, right? And one of the first things that we like to work on is your break even. And why is that important? It's because when you're going into a new market, you know, there are a lot of demands that are going to be put on you, right? Do you want to put people in the market, feet on the street? You know, distributors are going to be demanding that you support your business, and then retailers want you to support the business. And so, while the hope and the expectation of lots of success and lots of volume in new markets is pretty enticing, there, you know, you got to think about what the upfront and what the ongoing costs are to your brand and to your business. And so what we like to do is just to use, and again, this isn't the be all end all, but one of the great, I'm sorry, The image isn't coming up. I apologize. But what we like to do is work on a break-even analysis. And let me just tell you exactly how this works, right? So the way you kind of do your break-even is you need to first understand what your gross margin per case is, right? So let's just say I'm making $20 a case, right? And then whatever that spend or investment requirement is, right? You take that cost and you divide your gross margin, gross profit per case into that. And what it will give you is the number of cases needed to break even, to cover that cost. And so, you think through it. If it's a $1,000 expense and you're making $20 a case, right? That's 50 cases. Can you afford that? Well, if there are 5 accounts and you can do a 10 case stack in each account, chances are pretty good that $1,000 investment is going to work for you. It's going to pay off initially, and you're probably going to get a reorder from those accounts that will drive even higher profits for you. But all along the way, right, you need to be asking yourself, what do I gain by making this investment? What do I gain by going into a new market? And can my resources be deployed elsewhere, right? There are many cases of breweries, wineries, distilleries that don't expand beyond their borders or beyond their region because they can make enough money and be successful enough where they are, and they can churn a lot of margin. Now, I apologize. I don't know why my little chart didn't show up here today. Gremlins. But anyway, the next topic right now is how to expand in new markets. I'm going to turn that over to Joe.
Thanks, Andy. Good morning to all. What we have seen through the years is that success in the adult beverage industry seldom happens purely by chance. You've invested far too much time, effort, and resources to get your business started, to really risk it all by overextending your expansion, the resources that you have for expansion, and making bad decisions while managing your growth. So what we want to talk about are 2 things here. Some of the keys that you want to consider as you look to move beyond your initial markets, and the home field advantage that you've had and you've benefited from as you've started your brands. And then how to inform your decision making to improve your chances for success as you take your brands on the road. Slide. Okay. So let's discuss building your roadmap for brand growth. Effective market expansion is as much about strategy as it is the opportunity. You've likely heard it referred to as scaling your brand, which simply means expanding and growing your business, both in your current markets and, more importantly, into new markets. Thoughtfully considering the whys and the where throughout this process is absolutely critical to your long-term success. Stacking the deck in your own favor as you select new markets for your brands can greatly improve your odds of success and can provide the fuel that you're going to need for future expansion down the road. While maybe not an exhaustive list here, there are some key considerations that we'd like you to keep in mind. First and foremost is how the consumers that you have seen your brand appeal to in your initial markets, how those consumers match up with the demographics of the markets that you're going into. Super premium brands appeal best to those with the resources and the appetite to pursue them. So understanding your current demographics and the relevant trends driving those demographics can be incredibly important as you select markets to expand into. Some of the other things you want to consider are the distributor options that you have in a market, and can you leverage relationships that you have with distributors in your current markets as you expand. And in the beer industry, staying within supplier networks can be a great way of doing that. The regulatory considerations for those markets. So, what are the hurdles that you're going to face as you move to introduce your product to new consumers in those markets? So, having a clear understanding of what those regulatory constraints are, and then how you can work through them, is very, very important. The channel makeup. So is it a largely an independent market? Do you have a mix of independent and local and national chains? Or is it really heavily driven by the big national grocery chains? Because your selling proposition is going to differ. The decision making happening in a independent retailer is very different than the corporate buying presentations that large national chains require. Some of the other areas are the category trends. So is your product portfolio, is it trending well in those markets? Are there certain markets that are responding better than others? The competitive landscape includes both your direct competitors, so other craft brands, but what are some of the large national brands also doing in those markets, and what are the hurdles to entering those markets and competing there? The profit prospects, so are surprisingly profit margins can differ pretty considerably by state. So understanding where the retailer and the distributor both expect their margins to be is going to help you better forecast what those markets are going to generate in profit for you, and ultimately drive your investment planning. And lastly here is key account opportunities. So are there opportunities both on and off premise, and how those opportunities differ by markets can help you decide which markets to prioritize as you look to expand. And not the least of which is really, what will success look like for you as you look to expand into these markets? Can these markets and the success in these markets feed the next round of expansion for you? Or are these markets going to require a long-term investment, which may hinder faster expansion? Do the selection of the markets that you're considering, does that help or hinder your efforts to manage your overall sales effort across your current market list? Scattering markets, reaching well beyond kind of the adjacencies around your core markets can be really attractive, but it can really complicate the management of those markets and the frequency that you're in the markets observing what your distributors are doing on your behalf. And then lastly, is there a desired critical mass that you need to achieve with your brands if you have an exit strategy in mind? And which markets are going to help accelerate your progress towards that exit strategy? So really starting with the end in mind can be really wise counsel. Change slides. Thank you. With your expansion strategy in mind, you then need to consider how you're going to pressure test it to make sure that that strategy holds up to scrutiny. Gut instinct will only take you so far, and the entrepreneurial spirit and the risk taking that got you into the ring needs in time to mature into thoughtful and informed decision making. This is where fact-based and being fact-based and data-driven will allow you to consistently punch above your weight class. Andy and I have seen through our years in the industries, I should say, far too many times where opinions or efforts can be viewed subjectively. But when there is alignment around performance metrics and the data that you're going to use to measure those metrics, that can level the playing field between a new supplier and a really, really busy distributor sales team. It's often said that today's 3-tier system is relationship-based but data-driven. And that proves to be the case truly when you're looking at today in winning in today's really ultra-competitive environments, where data can drive insights. And we've seen those same insights then fuel actions by the distributor. Ultimately, those actions will determine if you're going to get the results that you're after. So it's really a build-on effect that that data analysis can help with to help reinforce the actions that you're trying to implement within a market. And data can help you leverage and help provide leverage, I should say, in many market situations. So when you're talking with a retailer, why they should carry your brand, well, your growth trends, the demographic trends in a market or specifically in an area where a retailer operates, having those types of facts can help persuade a reluctant retailer. Understanding really well who your consumer is and who the customer base is in a particular area or a neighborhood is really, really important when you're speaking with retailers when you're introducing a new brand. And then lastly here, understanding the sales trends of your brand and both market-wide and within those retailers can help give you the leverage to argue for an extra case stacking or an end cap display or a tap handle. When you have the information about sell-through rates and velocity, those can be really persuasive tools to use when speaking with a retailer. So data can drive much better informed decision-making, both for yourselves and your retailers. And that ends up driving higher profits for everybody involved. There's less issues with stalled inventory or inventory that is not moving through the store as quickly as it needs to stay fresh and desirable. Okay. So there's a lot of different data points that you could search for, and it's not my intent to bury anybody under a whole mountain of Excel data tables. But there are some key components of brand tracking that will be critical for you to manage your business, but also to be persuasive in the marketplace, both with your distributors and with your key retailers. So some of the categories that are worth tracking is the industry trends that you're seeing in that market by segment, be it by the style of products and the price points that are being asked. How do those differ in the marketplace, and where your brands fit into those segments? And then how is the volume, the growth rates, and the value that those segments are driving for retail? How are those changing over time? If a certain category, IPAs, is showing huge volume, a disproportionate amount of growth, and is driving a lot of value for the retailers, those components can be used to help you introduce your new IPAs into that market. Another consideration is the channel trends. We saw firsthand at the start of the pandemic what happened on premise versus off premise. And we've seen more recently how those volumes maybe not have come back fully, but have stabilized and are improving. So how are those channel trends differing in your markets? And then how are the chains versus independents? I operate out of Chicago. Chicago's got a great mix of chain accounts and really strong independents. Some markets are more driven by chains, and some markets have no chains at all. So how are those trends, and how are their business approaches changing the environment that you're going to operate in? And then lastly, the brand trends. How are your brands in particular doing in terms of distribution? That distribution by channel, is it growing on premise or being disproportionately driven off premise? How is your volume? And probably most importantly, how is your velocity or your sell-through? Those are key components that you need to consider as you plan your market expansions. But as you're working and managing those markets, these are key facts that you need to keep your fingers on to keep your distributors focused in working on your behalf, and continue to progress with your retail distribution and sell-through rates. And with that, we've talked a lot. We've covered a lot of ground in a relatively short amount of time. If there's any questions that we can answer, please, you can jot it in on the comment section here. We'd be happy to answer anything you that may be on your mind. And nothing's popping up.
We had a question, Joe, when we were expanding the MGP brands into new markets. What were some of the challenges we faced when, sitting down with the distributor to get their buy-in? That's a great question. I'll just start with that. The advantage that we had at MGP, right, because of sort of how famous the mash bills were, we were able to open every door. Getting a meeting with the distributor was not hard. In fact, they came to us before we called them. The real challenge was once we made the decision to enter a new market, it was it was a blank sheet, and we had to compete just like everybody else. And so we had to, just as Joe has said, we had to understand the market. We had to understand the cost of doing the business. We had to understand what the landscape was, chains versus independents. And we also had to understand what those demands, not only of the distributor were, but of those retailers. And we had to tailor our plans, our programs, and our budgets to meet those. Anything to add, Joe?
Oh, absolutely. I think being prepared as you enter into discussions with a distributor, understanding what it's going to take to drive your brands through the distributor and through retail is critical. And being prepared with that as you as you start those discussions with your distributor, is going to separate you from an army of craft suppliers who have the ambition to grow into a new market, but not necessarily the plan to be successful there. So one of the questions that popped up here on the side is, what are good times to enter a market or avoid entering a market? And that's a great question. So Memphis Made, thank you for that. You really have to consider the market and what's happening in that market. The fourth quarter is probably one of the worst times of the year to launch a new product. The distributor, think about what you're asking a distributor to do, to go into a retailer and talk about a brand that the retailer doesn't have any understanding of yet. Being able to have that conversation effectively at the busiest time of the year for the retailer is asking a lot. So being really conscious of what the distributor is going through at a point in time, and when their people are going to be able to focus on your brand and introducing your brand, is really, really important. In most cases, certainly in the distilled spirits industry, a distributor will not even talk to a supplier about launching a product in the fourth quarter. And then, usually the best times to do it is not in January, but maybe in February or March, as kind of the hangover of the holidays wears down, and retailers are starting to reconsider shelf sets and considering new products for their shelves for the coming year.
Let me build on what Joe was saying. One other consideration to put into your mix is that, regardless of the category, right? Distributors, there's been consolidation, on every tier, but the consolidation in the distributor tier has been pretty dramatic, and every distributor has more SKUs than they can handle, and so we would counsel anyone thinking about entering a new market is to do your homework first and really do a lot of prep work, including outreach to distributors, interviews with distributors, consultations with distributors in the trade, to understand before your very first step into that marketplace, kind of what the landscape looks like. Because the more homework you do and the more prepared you are, when you have that initial meeting and acceptance by a distributor, you're going to be prepared to really work in partnership with them, and to have leverage, and to be in control of your own destiny.
Great question from Memphis. Thank you for that.
Any other questions? Well, I'm gonna, you can't do a presentation without a shameless commercial plug. So, should you guys have questions that are specific to your brand, to your needs, you can reach us at brandelixir.com. We're Andy and Joe each are at brandelixir.partnership.com, and we're also on Twitter at brandelixir guys. Our numbers are up here, and I know Andrew's got them as well. So if we can help in any way, we're always happy to take a phone call, and wish you all great luck, as you continue to build your brands and expand your markets. I'm going to turn it back over to you, Andrew. Thank you all very much.
Thank you.